Good morning, everybody. It's Thursday, June 12th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. We'll be sure to get to it during the show. Overnight markets here, July corn up 3 1/4 at 440 1/4. July soybeans were up 2 at 1052 1/2. And July Chicago wheat was up 1 1/4 at 535 1/2. This morning we had weekly export sales report. Not real pretty, really, across the board. Corn old crop was 791,300. That was towards the bottom end of the range. We had net cancellations on the new crop side, negative 29,600. So that was pretty disappointing on the new crop. Soybeans, 61,400 for old crop, well below the low end of the range there, and 58,100 for new crop, also really at the bottom end of the range. Wheat, 388,900. That was below the lower end of the range. They were looking for 400 there. Meal sales, 214,500. New crop, 46,500. That was that was a more solid number on the new crop side. And for bean oil, 5,600 on the old crop, and net cancellations of 1,500 on the new crop. We had good CPI data out this morning. Saw an increase of 0.1% on the month. It's like the fourth month in a row I think they've seen better than expectations there on the inflation side. So good data there. I guess getting started here this morning, guys. This Chinese deal that President Trump is touting, certainly, as we've mentioned yesterday, needs to be approved by both Trump and Xi. But it's confusing at best, right? I think that they're very focused on rare earths and things of that nature. But I think the devil's in the details, right? We really didn't get any ag-focused rhetoric yesterday, so I think we'll be watching that. Increasing tensions in Iran and Israel, U.S. starting to pull assets out of the embassies there through the Middle East and Iraq and whatnot. So things heating up over there. Something that as we go into the weekend, we'll certainly need to be watching. And I know a story that we're going to touch on right to start was a drastic drop in the ADM Decatur processor basis for soybeans yesterday, and I know we've got some thoughts there and some ideas or things that we're looking at. So with that, Dustin, why don't we kick it off? Give us some thoughts here. Poor sales, but certainly everybody kind of focused this morning on what ADM and the processing groups did yesterday afternoon.
Yeah, so yesterday there was kind of some buzz, and we got a number of calls about this, and the basically the processing bid from ADM and Decatur dropped 62 cents overnight, and that was led by the fact that they're switching their bid from July to November and going to a negative basis in November. So you're losing the inversion off the futures market and going to a lower basis. So it ended up being a 62-cent drop in flat price overnight. So obviously that's kind of sent the market into a bit of a tizzy here. Was there much there was a little bit of reaction overnight, like July, November was slightly down. It's still inverted. And we're when you look at the verbiage of why, some of the account people kind of talking about why they're doing that, look like they got their needs covered. There's really not a crush margin to be had right now. Crush margins have collapsed, especially for old crop. New crop crush margins are still there, right? We still have a decent board crush margin. But if anything, this does kind of send a message to the administration just on guidance. I would say this is high profile enough to at least get some attention on this, that we really, crush margins are down, right? And that could actually lead to potentially some additional attention to that too.
I hope so. I mean, I hope the do nothings, start to figure this out, because it's been painful with no guidance. And, if it takes the industry to make a stand, I hate that it's at the, it's at the hands of the farmer, and I think that if you read the ADM letter, I know that we posted it, or we were looking at it here this morning. one of their account managers, I believe it was out of Decatur, put out, a note talking about what the purpose of what was going on. But I mean, just get your stuff together, guys. This is crazy. We've been back and forth. We've had false rumors. We've had bad stuff going on. But Ben, I thought you made a great point. I mean, this is commercials playing games, and and it'll be interesting to see what the end game is here. But I guess maybe give us your thoughts more on the commercial side as you see this.
Yeah, I think it's, your first reaction when something like this happens is uh, someone maybe has some, you know, ill intentions toward their competitors. But I think it's worth saying in defense of ADM that they also have to mark down their physical inventory mark to market when they make a change like this. So it's not, yes, it hurts at the processor, but they're probably sitting on a lot of beans at elevators within their processing facilities, things like that. So they're taking a huge hit on inventory that's on hand when they do something like this as well. And I think Dustin made a great point. I think it's trying to send a message that we need some guidance. The volatility in soybeans has probably been as poor as I can ever remember it. And then I think you have to look at products. Like there's some down the crusher, whether you're crushing beans or ethanol, they have some things to factor in that make them really need to grind, right? First and foremost is they have downstream obligations, whether it's meal or oil. Maybe they've met them, maybe they haven't. That I don't know, but they will continue to have those. I think that maybe for products it starts to be somewhat friendly there. We know that there's a big meal short there. Meal prices down because of the kind of the change in the industry where we're crushing for bean oil. So, meal looks to me like that's a place where we could make some changes. And the second factor of downstream obligations to their customers is that fixed costs at a processing plant are very high. An ethanol plant, 200, 275 a day, depending on the plant, maybe 300 now. So it's expensive to keep a plant going. And that's why we see them a lot of times will run for a period at slightly negative margins. So it's a tough business decision on their end, but I hope that the people in Washington are listening and we get some guidance soon. So shocked, certainly in the industry. If you would have told me this morning going home last night that July beans would be higher, I would have said absolutely not. But ultimately the market will figure this stuff out. And cash beans, it could be friendly to new crop beans a little bit just on spread action. So you got to see how it plays out. Day before report, we'll see. But I think that when you take these sort of drastic actions, it catches a lot of people off guard. Typically going into this time of the year, other commercials, are the ones that are still sitting on beans more so. A lot of people will move beans before we start to get warmer weather. Commercials are looking to hold them and be, hit that last bit out of town before a new crop. So I think this sent some ripples through, and it might bring a little volatility back to the soybean market. I don't know if it's going to be up or down, but I would expect to see a little more movement as people are trying to position square after news like this.
Yeah, and to be clear, we're we're going to get that USDA report out 11 o'clock Central here today. By all estimations, we're not looking for anything wild, but it is a USDA report, so certainly we're keeping an eye there. Jace, what's on your mind this morning? I mean, I guess anything overly crazy you're looking at on the report? I know you mentioned first thing that kind of oil led the way this morning, which was interesting. If we get some news out this morning of some sort.
Yeah, from what I could tell, some news out of India that we're cutting their import tariffs. It looks like palm oil jumped pretty good on that. So that's what I'm guessing soybean oil was chasing. You look at a bean oil chart and just the last, hour before we closed overnight was up sharply. And some of that's probably follow through with just technicals. If you look at bean oil, we traded back above the 100-day. So just might be some breaking out in the technicals. That's all I see. I mean, obviously we've been talking about weather. The weather looks good. It looks like the models put a little more rain back into Iowa. So not
For
necessarily
like this,
friendly.
I saw like for the 7-day, but then they got drier for the like 14 to 20.
Yeah,
So
it seems like we're trading this ridge, right? Like everybody's talking about this
yeah,
ridge. Where's it going to set up? It's a big deal if it sets up further east, and we have some drier weather in Iowa or Illinois. Obviously, that's going to matter dramatically, right? So, I think we're going to trade these models for a while, So we're obviously at cheap prices. We're trading, in my opinion, a record yield in corn and a record yield in beans, and it's middle of June, and I've said this, when you're in a bear market, the market sentiment, every bullish news or bullish thing is just discounted, and it's the same thing in bull markets. Anything bearish is discounted until something changes. So I think that's what we're in. I mean, I think people compare this year to previous years, right? It's just going to be a 2012, right? Like it's hot and dry right now, right? This is what happened in 12, but
Yeah.
it does remind me somewhat of that, at least the market setup where everybody in 2012 was bearish, right? We got a lot of acres, we planted it, everything looked great, and the dry weather was discounted for a long time, right? Because it's supposed to rain, it's going to rain, and then eventually didn't, and the market reacted very quickly and abruptly. Not calling for that this year, obviously, but we're kind of lulled to sleep somewhat on price action because we just don't go anywhere. Every little rally gets sold, and the funds seem to be comfortable getting really sold. So I personally think we're going through this period. Obviously, everybody's getting nervous because this is supposed to be the time you're hedging. I think Justin made this point yesterday. It's like, well, this is the seasonal when you're supposed to sell. And it's like, well, yeah, but the seasonal is coming off of a price rally, not the prices we're looking at today. So, and my thought is you got to have some sort of upside built into your marketing for July and August. Personally, obviously you got to look at make sure you're covered if we don't see that. But I really think you got to be careful not to get too over your skis on hedging at a record yield because the price is telling you should. So no, that's all I see. We'll see what the report says. Most people don't think there's going to be any, me included, any probably big news. Maybe some changing in South American numbers. So obviously we'll be looking at that. I can't imagine they change our numbers too much this early. So.
Very good. We'll take a look again. That'll be out at 11 o'clock Central. So we'll have some thoughts in our write-up here this evening. Ryland, let's move over to livestock here this morning. We still got a deteriorating slaughter that we're dealing with in cattle, which I think is, obviously continues to signal tough packer margins and things that they're going through on their side. And I know nobody in the cattle industry really feels too bad for them. And then looking at hogs, a 5,000 contract increase in open interest, which was
a record. Yeah.
Did I still got you?
Oh yeah.
We are, obviously live show, so you get some technical difficulties. I just blacked out, so I didn't know if I was even talking to anybody, which was great. Anyway, 5,000 contracts, increase in open interest. Take it away, bud. What's your thoughts?
Yeah, no problem. So it looks like we're losing a little bit of momentum in the futures market right now. I mean, we still got the discount on the board, but cash markets are still on fire. Choice and Select are still making new highs for the move here. Choice beef up $3 yesterday. So we did see a little bit of cash trade, 239 Kansas, 235 in Texas. So I think they're still hopeful to see 240 plus in some regions. So I think that's kind of the idea right now. But overall, maybe the market was just waiting to see a little bit of this. So we'll see how that goes. I mean, right now, like I said, we've got this big discount. Everybody's wondering how this basis is going to shape up here, but it does kind of feel like without any really bad news per se, there is a little bit of caution here that's being exemplified a little bit. So I don't really know what that stems from. Maybe we're seeing some profit taking from the longs. I mean, it's been a pretty good run here. But overall, there just really isn't any bad news. With Packers reducing the slaughter, perhaps we could see a little bit less aggression in terms of cash prices in the near future, but we just kind of want to see how this all plays out. So maybe the market's getting just a little bit concerned about that. Overall, beef sales were up 71% from last week at 15,300 metric tons. So pretty firm sales overall. It just seems like both places the demand is relatively strong right now. I mean, we're seeing cash and cutout really kind of lead the charge, and same thing in the hogs. New contract highs, record open interest, another 5,000 added. So I think we are drawing out a lot of hedge pressure as well as new buying, and it just seems like seasonally this is the time. Everything seems pretty firm. We had cash up $1.49 at 107.33, and carcass going up 220. Bellies were up $4 yesterday. So all the news is relatively firm, just a little bit weak on the export side at 9,700 metric tons. So overall, it just seems like everybody wants to be a little bit friendly going into this season in terms of cutout. And, obviously we're starting to see the producer really start to take advantage of some of these premiums in the deferred contracts. So it just looks like we're running into maybe a little bit of resistance up here.
Very good. Appreciate the update there. We just came into the open again. Bean oil up 101. So certainly leading the way. We got a nice bid in beans as well. New crop beans are up 6 1/4, but we'll get a rundown here. July corn up 2.5, 439.5. July soybeans are up 3 3/4 at 10.54.5 is the last. And July Chicago wheat up 1/4 at 534.5. USDA report's going to be out at 11. Be sure to look at our afternoon commentaries there. We're going to have a write-up on anything that potentially changed on that front. Also, tomorrow, be sure to tune in. We got Fun Fact Friday. Always a great way to go into the weekend. You never know what you're going to get. So Brian will be all ready to go for you there. And Jack will be in to wrap the week. So that's always fun as well. We get a combo between Fun Fact Friday, Jack in the house, going to wrap up the week. So be sure to tune in. We appreciate everybody that does tune in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so. It'll keep you up to speed on everything that's going on with the AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day. We'll talk to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.